Well, hello there, Mavericks. This is Rob Reinhold, and I cannot believe it is June 1st already. Let's jump into what happened today. So we had a pretty strong day today. First off, we had the debt ceiling bill pass the House. Now, the House is the big challenge. The Senate is coming up. The Senate is pretty much a done deal. I'm very happy to say I think we can all put this debt ceiling bill behind us until 2 years from now, where we probably do this again. We also had the ISM manufacturing report this morning. That was weaker than expected. Now, manufacturing has been weak for a long period of time. We then got a report from ADP about employment, showing that employment is much stronger than was expected. So we are having some conflicting signals here in the market. If we take a look at the performance today, Dow Jones is up 0.5%, S&P up 1%, NASDAQ up 1.2%, Russell up 1%, oil jumping back from getting absolutely clobbered over the last week, and gold had a little bit of an up day. So this was a general overall up day, but I want to point out one thing. Look at the advanced decline line. This is the strongest the advanced decline line has been in a while. We all have been talking about how narrow this rally has been, where the large cap tech stocks were the only things going up and everything else was going down or sideways. Today we had participation across the board, but as you can see, we still have the majority of stocks under their 50-day moving average. Not really that bullish. Let's take a look at the charts here. Here's the S&P. We had that 1 month high base, broke out. We hit a high and then we came right back down and we bounced. And at this point, we are holding this level here. We're holding these levels and actually we're trading near the top end of the range. We expect this market is going to go higher over the next little bit. We take a look at the Qs, you can see that this thing is still on fire. It's still on fire. Okay, we're not breaking out to new highs yet, but look at this candle today. It's showing you that it does not want to go down. There is still more strength and weakness. And for the first time in a while, this thing is mostly green, not just the Microsoft, Apple, Google, Meta, Amazon, Tesla. The whole market was pretty much green today across the board all day long. When we take a look at everything and we put a score to it, we are at a +2. We are moderately bullish. Over the past 3 months, we've been +2s and +1s the entire time. This market has been telling you it wants to go higher. I know you don't think it's supposed to go higher. I know you don't feel like it's supposed to go higher, but look, the market's been pretty clear that it is going to go higher. So look, let's take a look at some bullish trades. I've got 2 bullish trades for you. One side it was 1 bearish. Let's take a look at a few here. First up on the deck is GE. Now, GE is a stock that has been running, and it's been running for a long time. I said 2 weeks ago that I was really focused on making some plays outside of big tech. This is one of those plays I think you can make. This thing has been strong along with big tech, but it's not big tech. We are hitting some resistance here, but take a look. We are right at the top end of this range, right at 105. I love to take the advantage of selling these 105s for tomorrow. So I'm going to buy the June 100s, sell the 105s. It's going to be a diagonal call spread. Just for 1 day, I'm going to pull in a credit on that 105, and then I'm going to hold those long calls into the next week on General Electric. Next up is Redfin. As I said, I'm going to be avoiding those large cap tech names. I think they're still going higher. It's just they've gone a little far, and if anything does happen, they are susceptible. I'm just going to play in some other places that look better. Home building looks really good right now, and this is Redfin. They're in the real estate sector. Big run up. We pull back. Here we are right at this support point. We got a nice candle over the last 2 days, bullish engulfing, followed by confirmation. This thing is ready to go. I don't think you can get any more bullish than 1150, and frankly, I'm looking at a target of 11. So a 10-11 bull call spread on this one after June is going to be my play on Redfin. In the sideways category, let's take a look at Goldman Sachs. Now, Goldman Sachs has been trading between this, let's call it 315 to 330 area. Take a look at today's candle. We came down and we hit the bottom of it. We have no idea what's going to happen here with Goldman. We got a lot of support around this area here. It looks like it wants to break. I really love to use this opportunity to put on a targeted butterfly, and I'm looking at 325 as the midpoint. If there's a 325, go ahead and sell that as your midpoint. If not, You might have to do a 330, 320 condor and then put their legs on out here. We think this thing is likely to go sideways. If this market stays bullish, Goldman probably bounces up off of this and comes right back into that 325 area. That's where you want to be sideways here on Goldman. And we are always looking for bears here. This is Harley Davidson. Someone forgot to tell Harley Davidson that there is a massive rally going on. Here we are. It is breaking down. The big question is, okay, when do you want to short it? When do you want to get short? How do you want to get short? I'm liking this 30. And as long as I give it enough time, I think we continue to drift down. So 30-32, bear call spread, going out to either late June or maybe even into July, giving yourself plenty of time for this thing to work its way down. It definitely looks very sick here at the moment. Tomorrow is the first Friday of the month, which means we do have the payrolls report. So payrolls report tomorrow morning, which means that the market is likely up or down 1% or 2% tomorrow. Fully expecting there to be either a big move to the upside or a big move to the downside. That's not a real bold call here with the payrolls report and the heightened concerns that people have about the Fed. One of the things I've been noticing on Fridays, I don't know if you've ever heard of these zero DTE options. Zero DTE means 0 days to expiration, meaning people are playing these options that expire today. What they do is they sell out of the money calls and puts and get those little credits, 10 cents, 15 cents, 20 cents. This is giving the market more volatility, especially on these Fridays. Fridays tend to be big up days or big down days pretty much every Friday this year. So I would look for there again to be a big move tomorrow, either to the upside or the downside. The payrolls report is going to determine which one that is. So the thing we've seen over the last couple of Fridays is that whatever the direction is in the morning, it just keeps going all day long, whether up or down. So keep that in mind for tomorrow when we go into this options expiration. Thanks for joining me. Take care. Goodbye, everybody.